Hello and welcome to a new video on my channel. My name is Dr. Oliver Gottschall, and on this channel I regularly post new videos primarily for my students in bachelor and master's degree programs, but then also for anyone who is interested in listening to me talk about the topics of business, strategy, finance, and investing. And in today's video, I'm going to give a short introduction of the stock market here in Thailand. Specifically, we're going to do this in 5 steps. First, I'm going to give you some general information about the Thai stock market. Then we're going to look at the historical performance over time, over the past 20 years or so. Then we're going to look at market timing, at patterns that we can see here in the Thai market. And that is followed by a short discussion of 2 specific characteristics of the stock exchange here, which both are related to the shareholder structure of the companies listed here. And then we're going to end by looking at a specific topic here at the stock market, or in any stock market, which is IPOs, initial public offerings. So let's dive right into it. As always, we are going to do this by looking at facts, figures, and statistics. So first, just as a general overview, the Thai stock market actually consists of 2 markets. One is the SET, the Stock Exchange of Thailand, which has a market cap of around 19.8 trillion baht, which translates into roughly 550 billion US dollars or so at current exchange rates. And this is spread over 669 companies that are listed on the exchange. The other market is the MAI, the Market for Alternative Investments. That market is much smaller at around 550 billion baht and 188 listed companies, so only about 15 billion US dollars at the MAI. If you look at the composition of the SET, and that's the market that we will primarily look at because most of the activity actually happens in the SET. The SET by market cap consists of primarily services and resources companies, so energy companies. That makes almost 50% of the total market cap in these 2 categories. That is followed by financials and technology companies. If you look at the composition by companies, actually most companies are in the property and construction sector, 166 out of the 669 companies, followed by the services industry, where we have 126 companies. The 15 biggest companies by market cap are listed here. So the biggest company is PTT, which is the National Oil and Gas Company, with a market cap of roughly 1 trillion baht. That is closely followed by the Airport of Thailand Public Company Limited, AOT, which also has over 1 trillion baht in market cap. And then with some distance, 3 companies with over 600 billion Thai baht in market cap, which is PTT-EP, the exploration and production arm of PTT, Delta Electronics, and Gulf Electrics, an energy company. If you look at the market participants, the Stock Exchange of Thailand differentiates 4 different types of market participants. The biggest one actually over the past year, and this is from the 27th August until 2021 until the 26th August 2022. The biggest group were foreign investors. Foreign investors bought about 8.7 trillion baht or 8.8 trillion baht in value. And what is also interesting is that foreign investors were net buyers over the past 1 year. So they bought more in the Thai stock market than they sold, with a net purchase value of plus 221 billion baht. The second largest group are local investors. who spent roughly 7.3 trillion baht on the exchange. Local investors last year were actually net sellers, so with minus 61 billion baht. Then the next two groups are much smaller. So local institutes who were also net sellers during the last year. And then there's a category called proprietary trading. So proprietary trading actually means that brokerage firms trade the stocks using their own funds. Now, next, we are going to look at the historical performance of the stock exchange over time. And here I have made two charts in one, and that is the comparison between the Stock Exchange of Thailand, which is the darker blue line here. And I have compared this to the S&P 500, so the US-based exchange, US-based index. And what you can see here is a couple of things. So first of all, throughout the years, over the past 20 years, up until the COVID crisis, the Stock Exchange of Thailand has actually outperformed the S&P 500 by quite some margin. Yeah, they came close in 2008, 2009 during the financial crisis. But apart from that, the Stock Exchange of Thailand has outperformed the S&P 500 over that period of time. That outperformance basically disappeared over the past 2.5 years or so since the COVID crisis started. So since then, the two indices perform pretty much the same. So as of the latest data, which is the beginning of September 2022, the two indices have performed pretty much exactly the same, with the SET at about 333% gain compared to 20 years ago. And the S&P is just slightly below that with about 227%. Now, if you look at the daily performance day by day, what is interesting is that the performance ranges basically from minus 15% to plus 15%. So over the past, and this is now 40 years worth of data since 1982, over the past 40 years, there hasn't been any day where investors either gained more than 15% or lost more than 15% if they invested broadly in the SET index. Most of the days, in fact, the performance range between minus 1% and plus 1%. So that's out of the a bit over 9,000 trading days in the past 40 years, 3,700 trading days, 6,700 trading days happened in the range of minus 1% to plus 1%, with the positive side slightly larger than the negative side. Now, I just want to look at the outliers, and for that I just deleted the data here in the middle to make this a little bit more visible. So what we see here is that there were actually only 5 days in this whole period of 40 years. There were only 5 days where investors, if they invested broadly in the market, made a gain of more than 10%. And on the negative side also, there were only 3 days in this entire 40 years period of time where investors lost more than 10% on one single trading day. Now, what is also interesting is the PE ratio over time. So over the past 5 years, for which I have data, the PE ratio was roughly around 17 to 18 times. So this is price earnings. So a multiple of 17 or 18 times the earnings. The long-term 40-year historic average was at around 16. So the market is currently trading slightly above the historic average, but still at a very reasonable PE ratio. It came down a bit in 2020 and 21 during the crisis. It was up because also company earnings were lower and the stock market anticipated a recovery. That's why the PE ratio was higher during that time, but it came back to 17.8, which is pretty much in line with the past couple of years. So from that, what we can roughly conclude is that the market is not overpriced at this point in time. It's quite in line with pre-crisis valuations. Also maybe interesting, the dividend yield. So the dividend yield prior to the crisis was close to 3%, slightly above and slightly below, and has fallen now to 2.62% in 2022. This is the first trading day in September in comparison. So it was around that time. So slightly lower than it has been historically, but also not too far away from the historic averages. Now that was the historic performance. So next, I would like to look at something that is maybe interesting for the traders, for the day traders or traders in general, which is aspects of market timing. And first, I would like to look at a chart that looks at performance by day, by weekday. And what is interesting here is that in the period of the last 40 years, from January 1982 until August 2022, the weakest trading day has been Monday. So on Monday, on average, over this long period of time, there has been a negative return on that trading day of minus 0.15%. And the chance of making a positive return on a Monday was actually less than 50%, so 46%, which is the lowest chance or lowest probability of making a positive return. The best trading day was Friday, with a return of 0.21% on average on all Fridays over time, and a chance of making a positive return at 57%. Interesting enough, this is very close to data that we have from the US, where also Monday is the lowest performance day, and Friday and also Wednesday are some of the best performing days. Now, looking a bit more broadly over a longer period of time, so this is since the opening of the Stock Exchange of Thailand, since 1974 until July 2022, the monthly returns. And what we can see here is a couple of things. So first of all, the best trading month is January, with 2.27% return across all Januaries since the opening of the Thai stock market over time, closely followed by December, which has a return of 2.26%. Now the chance, the probability of making a positive return in January was 60%, and in December just above 50%, so 53%. The lowest performing month actually was March, with a negative return of minus 0.5%. The lowest possibility or probability of making a return actually happened in September. So September, from a probability perspective, was the worst performing month, with the chance of making a positive return only at 47%. The month with the highest probability of having positive returns is historically June, with 65% probability. So these are just some statistics for market timers. I wouldn't interpret too much into this data, but maybe interesting for some of you who like to look at statistics and historical data. So next, I would like to look at two very specific characteristics of the Thai Stock Exchange, and both of them are linked to the shareholder structure or the ownership structure of the stocks that are listed on the exchange. And the first one is the so-called insider holding. So these are holdings of shares of stocks that are listed in the stock exchange that are held by insiders, and that could be either owners owning families or managers that work in those companies and have insights into the financials of the companies. And to make this more meaningful, I compared the Stock Exchange of Thailand, the listed companies here, to companies listed on the Xetra in Germany. So what we can see here, I start with the number in the box first. So the average insider holding here in Thailand is almost 38%. So of all the shares that are outstanding, 38% are held by insiders. And this is much, much higher than in Germany. In Germany, only 9% of all the outstanding shares are held by insiders. If we go by market average, by market cap weighted average, this number comes down a bit, meaning that the bigger companies actually have less insider holding. So here, if you go by the weighted average, then it becomes 25% in Thailand and just below 4% in Germany. What is also interesting is the distribution of the insider holding. So what you see here, the percentages here are the percentage of shares held by insiders. So 80 to 100% means that the company is owned or held shares of 80 to 100% by insiders. And in the Thai Stock Exchange, there were 19 companies or 3% of total listed companies where the shares were 80 to 100% owned by insiders. And another 23% or 160 companies where insiders held 60 to 79% of the shares. This is fundamentally different. So you see here the two numbers added up, about 26% are majority owned by, or the shares are majority held by insiders. Very different in the stock market in Germany, where insiders held only more than 60% shares in 3% of the companies, or only 15 companies in the total exchange. The other metric that is interesting in that regard is the float. So these are the shares that are freely floating in the market, that are available in the market to buy and sell. And you also see here fundamentally different profiles. So the average float in the Thai Stock Exchange is only about 39%, meaning of all the shares outstanding, only about 39% are actually tradable in the market. If you go by market cap weighted average, then this becomes a bit higher. So meaning the bigger companies have a higher float, and then it becomes 43%. Not a big difference though. In Germany, this is very different. Here, the average float is 70%. So of all the shares outstanding, 70% are tradable freely in the market. And again, by market cap weighted average, it becomes 88%. So almost 90% of the shares are available for trade. And you see here that there's a relatively high number if we add up those that are below 40%. So this is 13 plus 45. That's 58% of the companies. 58% of listed companies have a float that is smaller than 40%. In comparison, in Germany, these are only 18% of the companies. So the implication of this is what? The implication of this is that if you are a shareholder, an investor here in Thailand, and as an individual investor, you are likely going to be a minority shareholder. Now, here in Thailand, you are really a minority shareholder. Even if you team up with all the other minority shareholders, because of the high insider holding and the relatively low float, it is very likely that you have not a big say in the annual general meetings or in anything related to the financial structure of the company. In Germany, on the other side, there is something that is called activist investing, where you can team up with investors, with other minority investors, and through the annual general meeting or together with maybe institutional investors, bring in motions and make a real difference to how the company is run and to the management of the company. Just important, if you invest in the Thai stock market, to be aware of that and of this limitation in the market. So there's one chapter left, and this is IPOs, a very fascinating and very interesting chapter in stock market investing. And let me talk about this briefly. So I looked at IPOs over the past almost 20 years, since 2003 until the end of 2021. And what you can see is, and this is the first day return. So in total, there have been 491 IPOs since 2003. And on the first day of trading, so between IPO price and the closing of the first day, you could have made an average return if you invested in SET listed companies of 24% in that first day of trading, positive 24.3%. On the MAI, the market for alternative investments, is even higher. It's 52.2% average return on the first trading day. Now, if you look at the performance over time, of course, there are ups and downs. There has been a real high during the period of 2011 until 2014, with IPOs returning somewhere in the area of like 69%, 45%, and on the market of alternative investment over these 4 years, almost 100% in every single year on average. So if you got the shares at IPO price and you traded and sold at the end of the first day, you made a return of basically on average roughly 100% in the MAI during that time. Now this has come down a bit during the 2018-19 period, but then also even during the crisis 2020 and 2021, the returns are back. And in the most recent year in the Stock Exchange of Thailand, there was a return of 20.2% and the MAI 89.7%. So in conclusion from this is, if you can get hold of shares at IPO price, on average, it definitely seems to be worth it. Now there's one last chart that we have to look at, which is the question of whether this always works. And the answer is no, it doesn't, but the probability is very high. So this is the period from 2003 to 2020. There were 449 IPOs, and roughly 3/4, 74% of the IPOs turned out positive on day one. So if you held the shares at IPO price and you sold at the end of the first day, you made a positive return in almost 3 out of 4 cases. There were 15 cases, or 3% of the total IPOs, where there was no return, so exactly 0. But there were also 100 cases, or 22%, where the return was less than 0. So where if you sold at the end of the first day, you actually made a loss compared to the IPO price. So this was an introduction to the Stock Exchange of Thailand, to the Thai stock market. I think the Thai stock market is very fascinating. It's a very exciting place to invest. It has some specific characteristics that investors should be aware of, but I hope I gave you a good overview of these characteristics. Thank you so much for watching. Thank you so much for tuning in.